Welcome, everyone. Welcome to stock valuations. How to calculate all these numbers that all these firms keep coming up with end of the year for the S&P 500, for stock. My name is Kevin Hurley. It's a pleasure spending the next 15-20 minutes with you. I'm going to share exactly how they calculate stock pricing, stock valuations, index pricing. I'm also going to go through my spreadsheet that I've used for 2026. But here's a quick chart on how market experts see S&P 500 in 2026. And a lot of people said, well, Kevin, how do they come up with this? And really, it's just a simple equation. The easiest way to say it, it's the forward. I'm going to get this so it does not come across, but it is the forward PE times the forward earnings. And that's about the best way to do it. For those of you that know the S&P 500, its average is like a 19 on the PE, forward PE. I did a little bit of research, and as I came up with some information, I have our current PE of the S&P 500 being way above the average. It actually states it's going to be 3154. So 3154 is the expected PE for the market coming up. That seems way above average, but that would be the future PE. You could calculate it just saying, okay, 31.51 is the future PE earnings. I need to multiply that by the price to earnings in the future. As I went from that one, let's do this S&P 500 earnings. They say right now it's going to be about 223.61. So if we were going to use those numbers for our price to earnings, we would say 31.51. I wish I hadn't done that. Let me just do a quick little cleanup here. All right. 31.51 times 223.61, and that would be your price to earnings. I'm going to work on a calculator that you guys can't see. I'm pulling it up on my iPhone, my calculator. So if we were to take 31.51, multiply that by 223.61, we get a price of $7,045.95. Now the question is, what will forward earnings be? Goldman Sachs thinks forward earnings for 2026 are going to equal $306 for the year. If I was to do my research, I think a PE, forward PE of 31 is high. Hurley Investments would tell you we're probably going to have a drop down and we're going to be at 25. If I was to take my 25 forward PE, multiply it by Goldman Sachs earnings of $306 going into next year, I'm going to have a price target of 7,650 because I think we're going to be rather positive going into the year. I'm giving myself 30 extra points of a leeway, and I think the S&P 500 is going to have a forward PE of $7,680. I did this a little while ago. I fall right in the middle of Citigroup and Goldman Sachs. When I did mine, it came out to be about a 12.08% growth, because I did this at the beginning of the year. So that's what I came up with. I'm in the middle of the pack, in the upward middle of the pack, but for me, I'm a little more interested on individual stocks. I trade a lot of individual stocks, and I want to make sure those earnings are what I think they're supposed to be. A lot of people have said, well, how are you calculating these earnings? Well, I use FinViz. FinViz is where I'm going to gather the majority of my information. And I calculate just about everything on a spreadsheet. I pick my symbol. I choose the PE, the forward PE, the PE I used, because I'm looking at different stocks and groups of stocks. Earnings per share next year, the earnings per share that I used, and I come up with my target price. I also have a target low, target high, dividend yield. I work these more towards the beginning of the year. I've highlighted some of the stocks that I've enjoyed and some of the stocks I plan going into next year. Key Corp has a PE of 26, a forward PE of 12. Financials seem like they should be doing pretty good next year. I'm doing a little bit lower than the current PE. The forward PE that's supposed to come down, I don't think it's going to come down as much. I gave it a 22. Earnings right now are at 81 cents per share per year, almost doubling to 179 next year. Banks are supposed to do pretty good next year with a little more rate cutting with Trump, pro-business. I came up with $1.80. If I multiply my PE used by my earnings per share used, I come up with a price of $39.38 on a stock when I did this at the beginning of the year, currently trading at $21.63. Target low scares me. I put this in here where I take the lowest forward PE or forward PE and the lowest earnings per share. It could be $9.79. When I take the highest, 179 times the current PE, gives me a price range of 47.79. I'm comfortable in thinking that Key Corp has the opportunity to move from $21.63 up to my target price of $39.38. That's almost 100% return. This is finding undervalued stocks just like Warren Buffett does. Brian has a list here, and there are a couple I wanted to go over because I see a couple that I think are pretty darn interesting. So all I do is I just, well, got to find what I want, right? Give me a quick second. I'm going to move these around. I move this, and I'm going to take this. I'm going to shrink this down a little bit. Okay. AVGO. I'm not sure if any of you know what that is. That is most likely Broadcom. Broadcom has had a heck of a move. It's really been taking off to the races. When I take a look at Broadcom, I see a price over here on the right of $352.21. That is today on the 12th. It had a nice move today, $352.21. So when I come over here and I take a peek, start to fill out my chart, gonna come right over here, price target on Broadcom, 352.81. I then start to gather information. And as I'm gathering information, one of the first things I put in is my dividend yield. So I'm going to grab my dividend yield, which I see right here is $2.61. or 0.074. Broadcom has a dividend yield of roughly almost 1%, but it is a couple dollars. And it is going up since this was last filled out. Okay, let's find our PE and forward PE. PE and forward PE are listed right here. When I don't have obviously an ad popping up. I also have my earnings per share and earnings per share next year. This is where I'm gathering my information. It's not too hard. PEs, you can see, are really high at 73.98. Forward PE is 24.86. Earnings per share listing at $4.76. Earnings next year are $14.17. It's going to have a breakout year for Broadcom. It's pretty easy for me just to fill in the numbers. AVGO, 73.98. Forward PE comes in at 24.86. By the way, I would move this out just a little bit, although I wonder why it's not showing. Oh, there we go. Gotta move my target over. All right, earnings, 4.76. Forward earnings are 14.17. Now, if I was looking at some things, and here's my list, I've done all kinds of stocks, hundreds of stocks, but I know for the most part, Broadcom's going to fit in that 35 to 40 range. So I would give it a PE of 40, which is in the middle of the 24.86 it should come down to, and where it currently sits at 73.98. That would be my PE. $4.76. Got to use a decimal point. Price to earnings. I think earnings are going to go up. I don't know if it's going to go up 14, but I could see a $13 a share. And now my target price is taking nothing more than the PE used versus the earnings per share. I come up with a price of $520. A low end price, I'm trying to take the lowest two PEs, $118.33. A high end price, the highest PEs. My $520 fits right in the middle. That's $170 higher than where it currently trades at. I like this opportunity for Broadcom to move $170, roughly 50%. I would think Broadcom could be an opportunity for, well, I would just think it's an opportunity that I could use, believing that it's one that can move significantly higher into the near future. I would be a yes to looking at adding Broadcom to my portfolio. There's one other one I was looking at that I want to go over with you. BX. I'm pretty sure I think that's what it is. But let's take a look at BX. Would BX be an interesting undervalued stock? That's Blackstone. Nah, I'm not interested in Blackstone. I actually wanted BlackRock. But I don't like any of those either. Okay. Let's go to the other one, which I thought was an interesting. DocuSign. It's going to be the next Adobe. They're moving into the future. DocuSign. What an amazing opportunity we have going into next year on DocuSign. When you hear that, calculate it. See if the talking heads on TV know what they're talking about. They have it at $68.31 right now. $68.31. Let's go down and find our information. Doesn't pay a dividend. I wonder if it's going to be a really good company or not. It seemed like it, but let's work our numbers. PE of 47.81, forward P of 16.57. If you ask me, that seems really rich. That's a rich PE for a company that only does one thing. I'm not going to give it the same PE as our stock we just were working on, which again, I should know that right off the top of my head, but I'm not going to give it the same as Broadcom. On the low end, it's a 16.53. I wouldn't give it a 40. I'm probably going to give it that middle of the range 32. And that's on the low end of a 32. If you take a quick peek over here for earnings per share, $1.43. I'm looking at the third column at the very top. $4.12 for next year. It's supposed to have pretty good earnings. I can believe it'll make $4.12 next year. I have no reason to suspect it won't. That gives me a price of $131 on a $68 stock. Target low is 23.64. Target high is 196.98. I would be interested in getting into a stock at $68 that has the potential again to double up to $131.84. Let's do one last one. A lot of people said, Kevin, we're bringing everything back to America. Ford. What about Ford? Ford Motor Company. Trading at $14.03. First time it's been to $14 in forever. $4.90 dividend yield. Wow, Ford is killing it. $4. It's a 4.9% dividend yield. It's not $4. It is actually only 69 cents, but it's a 4.9% dividend yield. When I look at Ford, PE of 12.03, Ford P of 9.33. Both of those are acceptable. I would probably give Ford a 10. If you look ahead, $1.17 for its earnings per share, it's supposed to make $1.50 next year. I see no reason why it can't make $1.50 next year. Only comes up to a $15 dividend yield on a stock that has a 4.90 dividend and a stock price of $14.03. Ford does not look attractive if it's currently sitting at 14, and I believe it can only get up to $15. Interesting, if you jiggle it around a little bit, if you go to $12, it can get to 18. Chances are it's going to fit right in that 10 to 10.5 range. I'm not sure I'm interested in getting in a $14.03 stock that has a price target of $15.75. This is how you work your own valuations. This is how you decide if a company is worth what it says it is. This is how you check the people on TV to find out if they are calculating anything close to what the stock could be in real life, or if they're just making up numbers. This is how you do the work to tell yourself if you have an undervalued company that has a long way to run. Guys, this is calculating valuations. This is how you do the dirty work. This is where those who are truly interested in what they're doing, this is where they learn to do the work for themselves. I would put in here www.finviz.com as where you find your information. And guys, welcome to finding valuations and finding those undervalued stocks that you may want to invest in. This is Hurley Investments. We look forward to having you come and attend future webinars with us. If you have a question of how this works, we can be reached at 888-287-1030. Look forward to you on our next video, and thank you for attending Calculating Valuations for 2026.